What's going on, ladies and gentlemen, and welcome back to another 5 video. It's your boy Money Mirror, and for today's video, we are going to be reviewing the losses that I took throughout this previous trading week. You all know previous week was the New Year week, so Happy New Year to y'all, my friends, family, and viewers that are watching. And yeah, like I said, we're going to be reviewing all the losses. And I'm going to be giving you guys an update on where the 100K account is and the reason why it's there. And yeah, make sure you guys stay tuned for the full video because these type of videos are really important. You know, it's all great to show the wins and show the highs of trading, but it's even more so important to study the losses and understand why you lost, so that heading into next week, you know, I'll be more conscious and I'll really lower my chances of making the same mistake. So make sure you stay tuned for the full video so you get all the wisdom and insight that are in this video. Leave a like, subscribe if you're new. Let's get straight into it. All right, ladies and gentlemen, so welcome to the beautiful land of the charts. Woo! Yes, price action, candlesticks, and more importantly than not, the back test and understanding why we took losses, right? So I'll start off by saying that the first trading week of 2026, even though the trading week was only like 2 days of 2026, but for the first week, I went 2 out of 6 on my trades, meaning I won 2 trades and I lost 4 trades. And I started off the week with these small buys right here. So I came into the week saying that I'm only going to buy. If you remember from one of my earlier videos I posted on just like my outlook on gold, I was saying that it makes no sense to be selling gold because gold is just a bullish asset at the moment, right? So let's do a start the new, and let's just act like, you know, it's actually Monday and we're looking at price, right? So this green little circle y'all see is that win that I took, and that bullish candle, this one bullish candle is the trade that I took and the buys that I took. So I'm gonna go down on my 5-minute time frame and show you guys why this did win. And the reason why I did win is because I was anticipating going into session. Mind you, I trade from 7 a.m. to 11 a.m. I was anticipating that the 7 a.m. candle was going to be bullish because we broke structure right here. Ty, what do you mean by broke structure, man? What does that even mean? Well, if you are a FXE Academy student or you just have a general understanding of how the market moves, you would see that the break of structure happened right there. Once price made this high right here, and then my entry was right here at that low, and I was a buyer at these lows, which formed that bullish 1 hour candle you see, right? Now, you know, these buys were simple. It didn't really reach the full max, the max profit I wanted it to, because as you see, bullish structure soon did get broken again, and as soon as this bullish structure or this higher low point got taken out with this red candle here, like I had no choice to close, right? But the theory worked. That's what's important, you know. The theory worked that I anticipated a bullish candle because of a break of 5-minute structure, and that did print a bullish candle. So the theory worked, and the theory also worked if I was a seller in this situation, right? Because as we saw, right, and as you should know if you are actively keeping up on gold, you should know that this first week was also very bearish on gold, you know. So back to the theory. Say if I was a seller and I was like in the seller's mindset, because mind you, it's hard to switch biases or mindsets, you know, once you make your mindset up, right? But say if I was a seller, then this would have been the entry right here, based off of the logic and the theory, right? You know, the bullish structure got broken up here. You would have been waiting for that first lower high point, and that's the first lower high point right there. And then of course that is really where all the profit was for the week, was for these sales right here, right? But I won the trade. Started the account off with a W on Monday. Now Tuesday was a interesting day, and this is where I started kind of deviating from the plan, and more so when it just comes to like the patience that is required with the plan, I should say. So we're looking right here. We are looking right here. And it's like so weird. Like this trade was so weird, man. It's just so weird. So okay. 7 a.m. Going into 7 a.m. we did have a bullish candle, right? Which is great. So like let's like actually act like we're trading session right now. So session opened with a bearish candle. So this is perfect, you know? Like with my setup, in order for me to anticipate a bullish candle, there has to be a bearish 1 hour candle previously to give me an opportunity to push price higher and print that bullish candle. And it all makes sense here. You know, currently what we're looking at on the 5-minute time frame is some short-term bearish structure, because this support right there had got broken right here. So now as a buyer, I'm like, all right, well, I have to wait for that high, or for a high to get broken, which it did there. And then I can buy at that next higher low point, which would have been right there. So this is a logical entry right here. This is an entry, right? And I believe I took this entry. Like I had to have took this entry. And then price broke. I do remember this. I remember this. I was in these trades. And once again, kind of the same way as the first trade we reviewed, right? Like these buys did not go far. And like in hindsight, you know, when you look forward thinking, you could just clearly tell that this was a bearish week, but you can see that these buys weren't really like holding up to the strength. So this is another, I didn't take a loss on this trade because clearly it went break even. But then once it got out, then I decided to stay on the market and enter again. Or I looked for another entry, and this is where the second loss, right? So this entry right here is cool, right? I feel like I did take that, but I might have went break even, right? But this entry right here is the real entry, right? That I took, and I really took a loss on. So mind you, right now, if we continue following 5-minute bearish structure, it's clearly bearish, right? Now, in my mind, mind you, right here, around here, it's like 9 a.m., right? So at 9 a.m., let's go back to the 1 hour time frame real quick. Our 9 a.m. candle was bearish. That's cool, because remember, I'm under the mindset that I'm only buying. And mind you, this is my strategy, right? I know we all trade differently. It's cool. But my strategy is that I'm only buying. And in order for me to be a buyer on gold, there has to be sellers. So when I see sellers in the market, I'm not complaining, because that's giving me kind of like it's not a green light, but it's like a yellow light. Like, okay, you can start moving into like looking for entries, right? Boom. Now, my impatient self on this Tuesday morning saw this higher low point right here, right? I saw this nice higher low point. And I'm like, man, I done studied higher low points so much, and I know bullish structure so much, that I know when a higher low point is formed, that is buyers trying to push price higher, right? Silly me. Because that's not what happened. Like, price came up, made this lower high right here, boom. Came down from that higher low point, boom. Price came up, retested the same high. That's cool. Okay. Retested the same high. Then it came back down, retested the same low. Now we're in some type of consolidation, right? Price came up, retested the same high one more time. And mind you, I'm already in the market. I'm in the market at that first higher low point, which is terrible. Why is it terrible? Because I already said it. Structure is still bearish. how can I try to be a buyer in a bearish market? And I like if 5 minute structure is still bearish, you cannot be a buyer. You cannot anticipate bullish 1 hour candles if the 5 minute time frame is still telling you that structure is still bearish. And that's where I messed up on with this trade. This is what led to another 1% loss right here. As y'all see, price clearly did hit my stop loss. It hit all stop losses for buys. And I believe on this exact day right here, I took 2 losses because I actually ended up revenge trading 2 within the same area. So like once price did stop me up, like that week right there, I was like, all right, well, price can respect the same support. They come back up, so I entered another buy. And then I saw the volume start picking up bearish, as y'all see, and I was like, gosh, I'm revenge trading. Get out the trade, Ty. Psychology. Don't revenge trade, right? If the market is telling you it's going one favor, believe it. All right, so now this other red box that y'all see, I'm trying to think, did I really trade this? I really might have traded this. I might have took this trade. And the reason why I say I might have took this trade is because y'all do see that structure did break to the upside right here, right? You know, we had a lower high point form right here, price from the higher low point, and then boom. And then I might have took the buy right here. And I think I did. I think I did take these buys on this same day, which is crazy. I was over trading like crazy this day. Take those buys, have 100 pip stop loss, trying to reach highs, make a new higher high, right? Like basic, like, all right. But it just didn't happen. Price came down, low, lower high, respected the low, and of course we're looking for the higher high to be made, but another lower high point got made and pushed price towards our stop loss. So that's another loss right there. So already the common theme that y'all are seeing with these losses is just it's the 5 minute structure. And look, eventually price did close a bullish 1 hour candle, because mind you, that's what we're trying to anticipate. We're trying to anticipate bullish 1 hour candles. And if we let price play out, you know, it's not really even looking good for the buyers. Like, once again, the buyers are not strong for this week. It was a bad week for buyers, you know. It's just not the best week for buyers. But moving on, let's move on to another winning trade that I did take, because, mind you, I did take some losses, but, you take the losses on the chin, then you look for your buys and take your wins on the chin too. And one of the buys that I did take, or one of the wins that I did take, let's see what this green is. Ah, right. So this green y'all see right here, this was on Wednesday, and I was fed up. I was fed up on Wednesday. I was like, bro, I keep trying to buy the market and I keep getting smacked. Like, and mind you. Yes, my strategy is to only buy, but once again, like I said, the same way I can anticipate bullish 1 hour candles is the same way I can anticipate bearish 1 hour candles. So I'm fully confident in my ability to catch sales just as well as I can catch buys. So let's just throw that out there, right? But anyway, price is going bullish. Price went bullish like that around this area because there was some news. 8:30, it was like USD unemployment claims, and that kind of rose price a little bit. But then eventually, we knew that price was going to go downwards, because in all reality, the news was actually it was actually good for the USD, which means that gold will fall. But this is the type of structure I was looking at. As y'all see, it's just bullish structure here because this support is being maintained until it got broken right here with these lows. These lows broke it. Y'all see like price sat there and broke below those lows there. And then I took sales. I took sales at this very first higher low or lower high point here, which is different. I'm a seller. I'm not a buyer. I'm a seller. Had my stop loss above the lower high point. Yes, the lower high point was found by the wick of that candle. So make sure when you do enter, make sure you are covering the wicks for your stop loss too. You know, I'm in the market. Yes, I entered. Price started going bearish. I'm like, cool. I'm a seller. Let's do it. And then price started coming bullish, and it's like, oh shoot, should I have been a buyer? God dang. But price ended up respecting, and I was able to take advantage of this bear structure right here. And this trade was the first trade that actually gave me my 3-to-1 risk to, or 1-to-3 risk to reward ratio, meaning that I was risking 1% of my account, and I was actually able to see a profit of 3% just based off of this trade playing out, right? Which is great. That is what you want. As you see, structure is being maintained all the way over here till it got broken right here, probably formed like a little doji or a small bullish 1-hour candle. Nah. All bearish volume right here, which is great. So that was a win. That was a win. That was one of the wins that helped stabilize the account, and it was like, all right, we're back. Now, the last trade I want to review before we wrap up this quick little back test, and before I do the next back test, drop your boy a like right now. I'm not moving on till you do it. I'm not doing it. Did you do it? Thank you. All right, so now we're back on the 1-hour time frame, and mind you, Thursday was New Year's Day, so markets were closed. Now this is Friday, right? Now let's go. Let's look on the. Let's zoom out a little bit. I'll say that, right? And let's turn off my sessions. So yes, clearly for the week, price was mad bearish. Gold's price was declining a lot. But when price declines like this and you zoom out on like a higher time frame, let's go to like the weekly time frame, you know that these sales are just gearing us up for another bullish run. And I know that this whole week, like I know that these sellers is just an opportunity to push price higher, right? Using this Fibonacci, for example. Now, on the 4-hour time frame, gold has been making substantial lower highs or areas of supply, right? And they're really based off of market structure too. So like this is a lower high point on the 4-hour time frame. The price started retracing and formed another resistance right here, which pushed price down. Then it formed another resistance right here, which pushed price down. Then it came up. Then it formed another resistance right here and pushed price down till eventually price did give us a signal that, hey, there's some buyers here, because that's a 4-hour bullish higher low point, right? Mind you, we're getting really technical here, and if you don't understand, I suggest that you probably watch a few of my previous videos. But long story short, this higher low point right here that was formed on the 4-hour time frame, it gave retail traders enough confidence to feel like, okay, there's enough buyers to break past that most recent 4-hour lower high point. And this is really important on gold, and it's really important because it's telling us that, for one, there's enough buyers, like I said, to push price higher, and for two, it's a possibility for a trend reversal and for price to continue going in the upward swinging direction. So now let's dive back deep and down to the 1-hour, right? Let's look at Friday, right? So Friday's up here. My session is right here. Let me turn my sessions back on. And, you know, I'm up. I'm actually, like, at this time, not even at my desk, which is crazy. I was trading away from my desk during this day, which it's a bad thing, but I was following my strategy, right? So we clearly see bullish structure here. And we entered session with a bearish candle. This is 6 a.m. to 7 a.m. right here. This bearish candle right here closed heading into our session. So it's perfect. Like, it's perfect. I have a bearish candle to try to anticipate a bullish candle off of it, right? So I see that. I'm like, all right, well, I already know what's happening on the 5-minute time frame. You know, when you see a bearish candle on the 1-hour time frame, you know that structure is bearish on the 5-minute time frame. So I'm like, cool. Let me just wait till this bearish structure gets broken, and there it goes right there. It got broken because this lower high point got taken out. Textbook, man. I'm where I'm at right now. Like, all right, I'm about to catch a trade. I'm not even home. I'm about to make a couple thousand, all that, right? Ah, man, I love this market. So, long story short, I entered right here because this is price's first high low point, right? Textbook stuff. And, I set my stop loss, got about a 45 pip stop loss on this trade. And I'm like, you know what? I check my phone down. Check my phone. I'm like, damn. I'm just like, the integrity of the buyers got broken really fast. Price made a higher high, higher low, higher high, retested the low, lower high point broke. All right, I'm all good for taking losses. I'm like, damn, that was a loss, right? But at the same time, I'm feeling really good about my bias. I'm like, bro, there's no way like buyers aren't flourishing in this market, especially considering the higher time frame analysis we did just a few minutes ago. So I'm like, all right, I'm still watching, and then I noticed that structure broke again. Like price broke structure again around the same area because it broke that lower high point right here. And then price made a higher high, higher low point, the same thing at the same price. And I took another trade here, and as y'all see, the same result happened. Didn't even go into much profit. I went into 26 pips profit, and then I got straight. This one was crazy, but we ain't gonna relive in the past too much. But this one was this trade right here is as you see, the first couple trades that I took throughout the week, I took losses because I wasn't patient. I was not patient, and I didn't let structure tell me what it wanted to do, right? Which is on me. That's on me. Like, I take full accountability for those losses. Hence my notes. Like, I wrote that stuff down. Now, these trades right here are not really so much on me because I did do what I was supposed to do. I did do what I was supposed to do in these situations, even though the losses are very they're dramatic because price did fall so much. But in hindsight, I did exactly what I was supposed to do. I came into the session, I saw we had a bearish candle. Okay. I see the bearish candle structure. I wait for that structure to get broken, and then I enter at that anticipated bullish structure. 2 times. Lost 2 times. So I can't blame myself, for taking that loss. I do blame myself for entering 2 times and taking a higher loss for the day that I should have, but I don't blame myself for taking those trades. And then as you see on the vice versa side, once structure did break bullish, price went bearish. And if you were a seller, which is like sellers had a field day this week on gold, but if you were a seller, you could have had all your sell orders right there at that blue box, and you could have ate. One of my students actually did catch these sales. I was really proud of her, and I'm sure she enjoyed the great profit to end the new year off, or to start the new year off. But those are all the trades that I took for the week, and I must say, heading into next week on gold, my bias is not changed. I am still bullish, and I look forward to catching the move back to the upside on gold, simply because of this area of demand that we're sitting at. Like, all those sales were at the highs that we were trading at, that we were trying to push price higher at, was for one, just price reacting off of a previous area of supply, which is right here. There's sellers here, so more sellers enter the market there and push price down. But now we're sitting at an area of demand, and now there's buyers down here. And I look forward to possibly anticipating price coming higher and breaking past this area of supply and going up. It's just correcting itself. Like, I look forward to the correction. However, or whatever the case may be, those were the trades that I took this week. Those are the losses that I took this week. And right now, the account is sitting at let's look at our Sway Funded account right now. Full transparency. Like I said, this series is all about full transparency, and that's what I'm giving to y'all. So right now, the account is sitting at $96,000 and about $50, right? And like, when you're taking these challenges, and you're in drawdown, right? For one, it's really important to stick to your risk management. Only risk 1% per trade and follow, whatever boundaries you set in terms of that. But the second thing I'll say about these challenges is it's very important to follow the system that you started the challenge with, right? It's very important to follow the same strategy that you came into this challenge with. Now, yes, my strategy did see success with my first trade. My other trades, that was on me. And then my later trades throughout the week, the strategy just didn't play out. Now, does that mean I'm going to sit there and go ahead and change out my whole strategy and start trading, I don't know, strictly supply and demand, or trading strictly off the fib or some other strategy? No, you don't do that. These challenges are about how disciplined and consistent you can be with a profitable strategy that works. And I know that my strategy is profitable because I've seen months and months of profitability trading this exact same way I'm showing y'all. So that's what these challenges come down to. Yes, I'm in $4,000 drawdown, but literally one winning trade takes me back up to right about break even. And I just have to keep being consistent. And as long as gold is following the trend that I want, we'll be back in the positive. So this is where we at right now, guys. Use it as motivation. Use it as inspiration. And if y'all like this video, please leave me a like. If you're new, please subscribe. And I'll see you guys in the next one. We got a big week ahead of us on gold next week. And I'll see y'all there. I'm out. Deuces.